Hello everybody, Daniel Carney here from Goodlife Financial Advice. Hey, in the paper in the last couple of days we've had the Labour government come out to say if they come into power, they're going to change the tax laws around negatively geared investment properties. So I just wanted to do a quick video to break down what that actually means in easy to understand language hopefully, and what the results could be of that happening. So it effectively means that those losses that people experience with negatively geared properties will no longer flow through to their personal tax position. So that could be a tax rebate of, well, if it's our clients, it's usually about 5 to 10 to 12 grand a year. That's not there anymore. So they're having to fund that themselves. If there's a loss in the property, it doesn't flow anywhere. It literally just stays there until the property may have a profit in the future and it'll be offset against that profit. So none of those lovely tax rebates are coming to the investors anymore should this law come in. So essentially, if you've got like an LTC or if you're owning it in your own name, it's like a normal limited company. A normal limited company just holds on to losses and offsets them in the future if they've got a profit, or if they've got a profit, they pay tax on it. So that'll be the same under this new law if it comes in. It's going to be phased in, they say, over 5 years, so 20%, dropping 20% per annum over a 5-year period, so it won't just hit straight away. So get some time for people to get used to it over a 5-year period. The other change is that they're saying to push out the bright line test to 5 years. So that means you'd have to own an investment property for 5 years, and if you sell it before then, you'll pay a capital gains tax on it. Doesn't really affect our clients too much, for example, because they're encouraged to hold it for 10 years plus. So some of the results that I think will play out from this is, I think this will push investors to the regions. I think they'll be leaving the greater cities like your Aucklands and Taurangas and Hamiltons and Christchurch, etc., and they'll be flowing out into the regions to buy property that has a higher rental yield so that they can afford to own investment property. I think it's going to push up rents because if investment property owners are having to fork out of their own pockets these new top-ups that they're going to have to do if the law comes in, they're going to seek that money from somewhere, and I think this will push rents up. I think it's going to decrease supply as well, because if less people can afford to get into investment property, that's less people buying and building property, diminishing the supply and making it tougher on the demand situation and housing crisis that we have. And I don't think any government's able to build enough to stem that tide. So you're going to see the rich getting richer. Investment property would fall into the hands of those that can afford the surplus that's required. I think it's going to be somewhere between about $50 to $200 a week extra to fund a negatively geared investment property. Somewhere between $50 and $200 a week extra. So that's 2.5 to 10 grand approximately extra a year. That's going to have to come out of people's pockets to fund their negatively geared investment properties. So I don't think that's going to put property anywhere near being not a great investment, by the way. It just means those people that own them are going to have to fund them out of their pockets even more. So that's if this law comes in, of course, and who knows what's going to happen. And I'm not giving an opinion either side as to whether I agree or don't agree with it. I'm just giving you some information here so that you can be kept up to date. And if I get any more info or a better understanding of this law or potential law change under a Labour government, and the result that could bring in, I'll let you guys know. Cheers.